Fiverr International is one growth stock down 89.55% that I think you might regret not buying on this dip. So in this video, I'm going to explain why I think that's the case. So let's begin. Starting with Fiverr International's annual revenue going back as far back as I can get data on them, which is until 2018. You see revenue has grown very nicely from less than 100 million, close to, let's say, 60 million, all the way up to 337.37 million, nearly 5x in 5 years. That's explosive growth as more buyers of services flock to the platform. And then if there's more buyers, then more people that offer the services also flock to the platform. This has become more evident as, during the pandemic, remote working became more popular. People learned how to work from home. People built out their office space inside their home. They got their computers, their networks, everything. So now the capability to work from home has increased substantially. And so the number of people that can offer services on Fiverr International's platform have increased. And since the supply has increased, of course, now people that want to buy those services are also coming to the platform looking to buy, one-off things instead of hiring an employee to do some of the things you need. More and more businesses are now saying, all right, before we hire somebody, let's, contract out these services and use them before we take on an employee, because onboarding an employee is difficult, time consuming, and risky, and then laying off an employee can also be burdensome. So businesses now, especially small businesses, are looking to contractors more and more often, and that's helping. That's been a big tailwind for Fiverr International. I suspect this will continue to be a tailwind for Fiverr International over the next several years. And looking at Fiverr International's operating profit margin over the trailing 12 months, you can see a very steady increase in this margin going from negative 45% all the way up to negative 13.9%. A nice upward trend here, making progress towards profitability. And I have a lot of experience in evaluating platform type companies like Fiverr International is, right? Fiverr International is just a platform that brings buyers and sellers of services together. It's similar to an eBay, which brings buyers and sellers of goods together. But instead of buying and selling goods, people on Fiverr International are buying and selling services, right? And if we compare Fiverr International to those types of business models like eBay, like Etsy, like Airbnb, we can see the potential for very nice expansion in operating profitability over time, because that's where those other platforms have evolved to, have grown to, because it doesn't take as much capital investment once you have built out the platform, once you've got the tech right, once you've got the software behind the services right, and you've grown to a scale that attracts a sufficient amount of buyers and sellers. It can be extremely lucrative. All we have to do is look at the eBay, the Etsy, and the Airbnbs of the world, right? To see the lucrative operating profit margins that can be obtained from employing this asset-light business model. And I'm already seeing progress on that front from Fiverr International, right? If we look back from 2019 to its most recent update, we're seeing very nice progress, right? There's already evidence that it's working towards that long run, very healthy operating profitability that we see with other businesses that employ this asset light business model. And especially if we look at the cash flow from operations, we're seeing much more progress on this front, right? Look at its cash flow from operations going from negative 60 million in the trailing 12 months in ending 2019 all the way up to positive 30 million in the most recent update. And again, this is a result of that asset light business model, because once it invests in the platform, it doesn't need to invest in large capital intensive projects and capital intensive spending that takes away from its cash flow from operations. So longer term, this can be lucrative, the potential, if it can achieve this scale, right? It's not a given that it is going to reach a scale that's going to be very lucrative on the bottom line. There is the potential that it can be, but it still needs to continue making progress. It's shown evidence that it's making progress, but it's got more room to go, right? So to be clear, it's not there yet, but it's making good progress. It's got good potential based on the foundations that it's built on. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And the final reason why I say you might regret not buying Fiverr International stock on this dip is that the significant stock price sell-off that I mentioned to begin the video, the 89.5% stock price drop, has Fiverr International selling at a very, very good valuation, at the cheapest that it's been going back 2.5 years, trading at a forward PE of just 20.09, just 20.09, for a company that's got lots of room for growth, has demonstrated that it's growing and it continues to grow. So I think this is a very good valuation to jump in here and buy Fiverr International stock. And for those reasons, I think you might regret not buying it at this valuation when you've got this opportunity. All right, so that's all I've got for this video. Thank you so much for watching. I've picked some videos that are popping up on your screen that I think you'll enjoy. Please click one of those and I'll see you over there.